Hello, everyone. My name is Simon Misiewicz from Optimised Accountants. I'm going to be starting tonight's webinar, talk about UK and US taxes. So if you have any questions, make sure that you write them down. There will be intervals all the way through for me to answer them. I'm just going to look away from my screen just simply because I want to make sure that we are live on all of our platforms, which it looks like we may be now. So that's good. So let's get on with the show. If you've got any questions, then feel free to type them into the box and we'll take from there. So I am Simon Misiewicz. I'm a qualified UK, qualified US tax specialist. So I'm dual, if you like, and I have a fascination of helping people cross border. So I actually live in Spain. So that makes it even more interesting because now I'm helping people from the US and UK move to Spain in a most tax efficient way, just like myself. So I'm here really to focus on investments to help you grow wealth whilst reducing your tax liability. So clearly today is more about compliance, but there's always an element of proactive thinking throughout. So there's quite a lot that we'll be covering off in that tonight. So let's get into it in terms of the etiquette. Now, for you guys, you don't need to worry about microphones being muted because you're not on Zoom with me tonight. And ask questions at intervals. Definitely want you to do that. So make sure you push your questions to me, and I'm more happy to take those on board. Okay, there are a couple of other channels that I'd like to mention to you. The far left-hand side is Expats International Tax Tips, which is also live tonight because it covers both the UK and US, so there is a cross-border thing. But if you are UK property accountants watching this, then feel free to look at some of the Expats International Tax. And if you are interested in moving to Spain from the UK, or in fact, moving to Spain full stop, it doesn't matter, it needs to be from the UK. There's our QR codes, and you can also find them on the front page of our YouTube channel to get all the connection points as well. So feel free to get your cameras out, do the QR code, and to launch those YouTube channels. Like I say, you can get those on the site, so that should make your life a bit easier for you. All right, so we're going to look at the Basics 101 right now. And this is just the fundamentals of tax that everyone really should be aware of. And UK versus US, I'm going to just take you through. If you are watching this and you're thinking, well, why am I looking at US versus UK? It doesn't matter. If you're just filing UK tax returns, this webinar is still useful for you. Well, it is useful for you, not still. It is useful for you. If you're filing US tax returns only and not UK tax returns, don't worry, that's useful as well. It just happens to be if you're filing both, then this is even more relevant to you. But don't worry, if you're only filing one US or UK tax return, is this webinar useful? Of course this is, yes. So in the US, you have an SSN or an ITIN. Typically, Americans who are born in the United States will have a social security number or an individual tax identification number. If they are people moving to the US, then you'll get an ITIN number. In the UK, we have a unique tax reference code. You do need to apply for all of these things before you can submit tax returns in the US or in the UK. So make sure you have those references always handy and make sure you never lose them. Okay, tax residence and taxes. So a couple of things for you to bear in mind is there is the myth of 183 days. If you live in a country 183 days, you are tax resident. And that's not necessarily true. And the reason why I say it's not necessarily true is because in the US and the UK, it's not true. So in the United States, you would be tax resident for 183 days, but not just in this current year. So they would look at 100% of the time that you spent in the current calendar year. Then they will take the third of the days that you spent in the previous calendar year, which in this case would be 2023, and then a sixth of the number of days you spent in 2023. And then add those together, and then if that exceeds 183 days, then you would be tax resident. So it's not 183 days in one tax year, which is what a lot of people would be misled to believe. In the United Kingdom, there are slight nuances even in here. And an example of that is if you have a UK home, an only home. So as for example, if you move from Italy to the UK and you only have a home in the UK and you've had it for 90 days but lived in it for 30 days, then you would become tax resident. And straight away, you should see that that is less than 183 days. So it can trip you up and you have to be very careful. US, you are taxed on your worldwide income. So Americans that are living in the UK, for instance, they would pay tax in the United Kingdom and they would continue to have to file tax returns to the IRS and declare their worldwide income, which I think is really unfair because you're not in the United States. It's probably one of the very few countries that do that. In the United Kingdom, there is going to be a lot of change going on. That's why I put 25 in brackets, so 2025. So anyone who is born in the United Kingdom, you'll be used to paying tax on your worldwide income. But anyone that is moving to the United Kingdom will have this foreign income gains 4-year relief, which is quite complex. I'm not going to go into too much detail in this show, but the first 4 years, there is either a discount or elimination of tax in the UK for your foreign earnings, which is quite handy. But then you go on to the worldwide income basis. So then you're left with tax ID, which I've already mentioned. Tax returns, tax year. So the US follows a real nice, simple approach. The 1st of January to the 31st of December. Calendar system makes all the sense in the world. The UK, bizarrely, 6th of April to the 5th of April. So if you're a British person in the US or US in the UK, you do have to be careful that the tax year ends are different. So you have to be careful with that. Tax submission dates in the United States, you typically have to file by the 15th of April if you're in the United States. You can file by the 15th of June if you're an American living in the UK or any other country for that matter. And then you have the 15th of October if you file an extension. In the United Kingdom, you have an option to file a paper tax return by the 31st of October. But typically, most people will file electronically and do that on the 31st of January. Tax payments. When do you need to pay tax? Well, in the US, it's the 15th of April. Now, that straight away should make you look at the dates above and think, well, how does that work? Because if I've got to pay by the 15th of April, but I'm an American in the UK or any other country, and I don't have to file till 15th of June, well, then there's a mismatch. And what about if I'd done a 4868 extension, 15th of October? That still makes no sense because I'm being told to pay by 15th of April, and that's true. If you don't pay your taxes, if there is a tax liability, then the IRS will charge you interest from the time that, from the 15th of April to the point that you file your taxes and pay any outstanding balances. So most people in the Americans, typically in most countries, may not have to file, or should say, not have to pay any taxes to the US. So they're quite happy to file later than the 15th of April. But if you do have tax liabilities, you're always better to file as soon as you can. In the UK, you have the 31st of January. And there's 2 extra dates on the UK that I want to talk about, which is payments on account. And typically, HMRC will give you the payments account from the previous year and the current year. So there's typically 2 payments in the UK, 31st January and 31st of July. And check your payments account because that's really important to know. Okay, so let's just go into how it works. Tax returns. Always get your wage slips. Now, I would always do a couple of things here. You will have your monthly wage slips, which will look at, for America, January to December. And you will also have to, for the UK, you would have to use your April to the following March. Now, if you're doing combined tax returns in the UK, US, you couldn't use your year-end summaries, like your P60 in the UK and your 1099s in the US. It just wouldn't work. So you have to be very careful with that. Interest and dividends, again, if you're doing dual US and UK tax returns, then you'll have some month-by-month statements. If you're just doing a UK tax return, they will give you a yearly summary for your UK tax return, but it wouldn't work for your US tax return. And equally, if you have an annual summary for US investments and you wanted to use that for your UK tax return, you couldn't. Of course, if you're not doing dual, as in you're not doing both UK and US tax returns, then you can use your year-end summaries for wage slips and interest as normal. Rental income, again, month on month, and because the year ends are not the same, you can't use the same profit and loss from Xero QuickBooks for each of your tax returns if you're doing UK and US because of the calendar system versus the fiscal year in the UK. I'm going to just take a little break just for a second to see if there's any questions. I don't see any questions right now, so I'm just going to double check that I've not seen anything. No, I can't see anything at all. So I shall move on. But if you do have questions, then feel free to post those questions to me. US, UK tax due and rates. So what are we talking about? What type of income will you be taxed on? And the way I always look at this, and this is where international folk get this really wrong, unfortunately, and they're either being advised wrong or they just make some assumptions that isn't quite right. So wherever you are based or wherever the asset is based. So if you're self-employed, as for example, if you're self-employed and you're a tax resident in a country, that is where your income will be taxed. Now, if you're an American in the UK and you're self-employed, and you work and live in the UK, then the UK will obviously tax your income. If you're an American, of course, you still have to do your US tax returns, but the UK will tax you first. Now, if you've got assets, so you could be a British person now, and you've got holiday lets abroad. So you may have holiday lets in Portugal, in Spain, and so on. Now, the asset is based in those countries, the property is based in those countries, and therefore the tax authorities in those countries will typically tax those first. And then you will have to then declare that still on your UK tax return. So you don't avoid it. And that's what a lot of people don't understand, is that they still have to file taxes in the country that they've got the asset or they're working in, and they still have to do a tax return in their home country, whether that is the United States or the United Kingdom. As it says there, you pay tax in the country and the US too. So if you have a foreign property in Spain, you would pay tax in Spain, and you would then have to do tax in the US as well. It could be the UK as much as anything else. Don't worry though, most countries will have allow a tax credit for foreign taxes paid. So again, in that analogy, if you are someone who is American or a British person that owns property in Spain and you are taxed in Spain, don't worry, because you will get a tax credit for the taxes you already paid in Spain against your US and UK tax return. And that means that you do not pay tax twice because of the tax treaties that are in place. So what I want to do here is just give you, for anyone who's thinking about moving to the US or UK, it's just to make a comparison of the amounts of tax that you have. And I'm going to look at the tax-free allowances and so on. So in the United Kingdom, you have a tax-free allowance of £12,570. And I've used the exchange rate of $1.28, which is equivalent to $15,963. As a US tax filer, single person, you get $14,600, but you do have the opportunity to file as a married couple, which means the standard rate is $29,200. But straight away, you should be seeing that the UK does give you a better tax-free amount. However, if you are someone in the UK and you earn a circa about £25,000, you will have an income tax bracket of 20% on that earnings. The equivalent in the US is $31,750. You pay a 12% rate as a single person or as a married couple, which again should show you that you've got a difference of tax, which the US is cheaper. So on earning £50,000, I've just put in 20% just because we know that the high rate tax band of 40% kicks in at £50,271. So the £50,000 is just in that 20% bracket. So in the US, that's equivalent to 63,500. You got a tax rate of 22%, which is kind of disingenuous because actually the £50,000 is so near the 40%, it's untrue. And then as a US married couple, the tax rate is still 12%. So on earning £100,000, will be paying 40% tax in the United Kingdom, but it's only 24% as a single person in the US and 22% as a married couple in the US. Some of the details: £150,000 earners now, 45% tax. Now, if Labour talk about doing anything here, it could go up even higher. So that's something to bear in mind. As a single person, you have got a tax rate of 24% and then 22% as a married couple. Looking further, if you've got £250,000 worth of earnings, then the UK is still 45%. As a single person in the US, it's 35%, 24% as a married couple, which is still less. Even at £500,000, the US still doesn't charge you. This is the top tax rates now. So the UK is 45%, US 37%, and the married couple there is the 35%, still cheaper. It's not until you get to 1 million before you get to the 37% as the married couple. So there's a huge differentiation between the UK system and the US. The only difference, of course, is that the UK tax system is based on the country tax, and that's all there is. In the United States, you do pay state tax. So anyone thinking about moving to the United States, you do need to think about where do you want to live. So Bezos, who owns obviously Amazon, has moved to Florida because he doesn't want to pay the income tax. So it's significantly advantageous for someone like him to move to a cheaper state, which is 0%. So you pay the federal country tax, but there is no state tax. So that's quite handy for someone like him. All right, I'm going to just take another break. I can't see anyone asking questions at this point in time. So I shall crack on, as they say. Okay, so now we will look at US and UK tax withholding and tax treaties. And let's have a look at the details within this. So again, as mentioned, you will be taxed wherever the asset is based. So this is quite good for property investors. If you've got property in the United States or the United Kingdom, then of course the asset is based there. That is where it will be taxed, but then you'll be taxed in the country you're in too. So you do have double taxation. Well, that's not true. Double taxation doesn't exist where countries have got double taxation treaties in place. So you will get a tax credit for the taxes already paid. That's just a quick reminder. Whenever someone's saying, oh, hold on a minute, I've paid tax here, just remind yourself that you have to put it in the tax return that you live as well as where the asset is being taxed already. Don't forget to put the tax already paid in your tax return. So here's an example of tax withholding and the treaty, which I think is quite useful. So rental income of the US is 30%. In the UK, this is withholding tax. So if you've got some properties, then there is a withholding of 30%. In the UK, it's 20%. But if you use the UK and US tax treaty, then the withholding taxes is reduced. So if the US try and say, well, you've got this $10,000 income, but we're withholding $3,000, actually, the treaty says it's only taxed at 15%, so you can get your money back. Interest pretty much follows the same thing in terms of withholding is reduced because of the UK-US tax treaty. Dividends the same. And gambling, interestingly enough, obviously, of course, in the United Kingdom, we do not tax people with gambling income, but the United States, they do. So there is a 30% tax charge that they would try and charge you at the casino. And if you're not quite with it, that tax withholding will remain in place if you don't have the appropriate forms to stop that tax withholding. There is something called a W8BEN form for you to reduce that possibility. So that's also worth mentioning. What you have to do, a W8BEN is a tax treaty withholding document that says to US tax authorities, well, I'm in the United Kingdom, I'm going to use the US-UK tax treaty, and therefore I do not need to pay taxes on certain income. Fill in the W8BEN form, and that will alleviate the problem. You have to issue that to the payer before the payment is raised to you, and have reduced tax applied, which is really, really important. If the taxes are withheld in the United States and you're, like say, gambling over there, or you've got some business over there and it's been withheld, don't worry, you can file a US tax return and claim the money back. Alternatively, you can just accept it, that you've had some taxes withheld, accept it, pay it, or you can make sure that you claim a tax credit. Now, on gambling, you wouldn't be able to claim a tax credit, of course, in the UK because we don't tax it anyway. But in the US, you would do. So at that point, I would say you should do an American tax return. If you've got some self-employment income and you've been taxed, you may think, well, it's a waste of time claiming it back because I'm going to be taxed more in the UK. So I'll accept it. I'll pay the taxes in the US, but I'll put that against my UK tax return to reduce my tax liability overall. Just keep on going on with this. There is no point filing a US tax return to claim back the money, as we'll see here. So earnings here is £20,000. The interest that you have, that £20,000, what you have in earnings in the UK. But let's imagine that you have $6,000 rather in US bank account interest. That is going to be equivalent of 4724. Yeah, that's in dollars converted to pounds, of course. Tax withheld is 708, which is $900 converted back into sterling is 708 pounds. The UK tax on that income would have been 944.80. So why would you go to do all that trouble to do a US tax return to try and claim back that $900 of tax when actually you're going to be paying more in the UK? So it was a waste of time. You may just take the credit. So sometimes people can advise you to do tax returns in the US when it's not actually needed. If you have UK income, again, what you need to think about here is you've got rental income. US, again, I'm thinking about rental properties in Florida or other sunny destinations like California. Gross rental income is £10,000. So this is this is an American that's got UK property. I'll spin this. So it's someone in America that's got UK property. So got gross rental income of 10,000. Tax withheld is £2,000. So therefore it's $2,540. But the US tax would be zero. So the tax withheld of £2,000 in the UK, which is equivalent to 2540. Well, in the US, you'd hardly pay any tax on real estate, and that is because of depreciation. So in this regard, you would see this as a bit of a problem and say, well, actually, I don't pay tax in the US, so am I better to do a tax return? Well, the answer would be yes, because if you've got to gross rental income of £10,000, you will have costs such as repairs and maintenance, mortgage interest costs, letting agency fees. It's not as though that £10,000 will be a net profit, but the gross rental income is something that letting agents have to deduct 20% tax from almost straight away. And as a result of that, you are going to be in a position of being able to claim back some of that tax on your UK tax return. So it's worth you doing this tax return in this example. And as you can see, it's not an easy answer really to say, well, should I do tax returns? And that's where you probably need someone like us to overview and oversee everything that's going on with your financial affairs to see if it makes sense for you to do tax returns in other countries. Again, I will stop and have a look at that. So there's no questions so far. I'm just going to go back to my iPad just to let people just go in here and just see if there's anything I need to just whip on my board. So just bear with me a second. I don't think so. Okay. All right. So let's go into the next subject, which is going to be now US filing only tax forms for expats. And this is typically standard forms for Americans that are living in the UK. So I'm just going to go into that just very, very briefly. I'm going to just get rid of one content that shouldn't have been there. So just bear with me a second while I do that now. Okay. Standard forms. So an American always has to file a 1040 tax return in the United States. In the United Kingdom, if you're moving over to the United States, you will have to still file a 1040 tax return, again, depending on your tax status. You may have to continue to file UK tax returns, so be careful with that as well. There are things like 8938, which is, as an American, you've got foreign bank accounts, pensions is included in that. Then you would have to file form 8938, which is accompanying the 1040 tax returns. And British people moving to the US, you have to be really savvy with this because you will have to file that foreign tax form. And then, of course, you got the FBAR. I say, of course, FBAR is very similar to the 8938, which is the to list your foreign bank accounts. You would need to declare that to a different organization. It's not the IRS, but you would do this form, the FBAR, as part of your 1040 submission. It just goes to a different organization. And if you are using the UK-US tax treaty for whatever reasons, whether it's for income or withholding or for tax treaties that you want to use, then the form 8833 is useful to do that. When it comes to earnings, and I'm talking about self-employment income or income as a contractor, then you will have to do a 1040 and you'll have a 1099 year-end summary, which shows your earned income. Now, if you are British moving into the US and you've got some earnings still in the UK, or you're an American living and working in the United Kingdom, then this form 1116, foreign tax credit, can be quite useful. And the reason for that is because you want to say to the IRS in the United States, I am working, I have got taxed in the United Kingdom, but I want to use foreign tax credits so to reduce my US tax liability. Conversely, though, you have another form of 2555, foreign earned income exclusion. And that allows you to say, I have had income in the UK, but I'm going to exclude it from my tax return. So I don't have to do any tax, well, don't have to pay tax in the United States. Now, there is a limit on that, and then you would move over to the foreign tax credits. But again, which form should you use? Should you use 1116 or 2555? And typically, you will find that someone who is working in a high tax country, such as the United Kingdom, you would use the foreign tax credits because you do get the bonus of carrying forward the foreign tax credits into future years, where the foreign income exclusion is really useful for Americans working in a place like Dubai because they have pretty much low tax and then they would be taxed in the US. But if they use the form 2555 foreign earned income exclusion, it means that it could remove that income up to a cap from their US tax return and therefore not pay taxes on it at all. Just notice 121 there. Okay, so other type of things you need to think about as a British person in the US or an American in the UK. We talk about investments. Investments could be something that you put in the stocks and bonds, wealth management firms, but it can also include pensions as well. And PFIC rules are quite stringent. You have to think about, well, what are they? There could be mutual funds where it's going across different types of investments. PFIC rules are quite complex, and so are the investments typically that you're in. And that is what requires you to file 8621. There are heavy penalties for not filing this. So if you're not sure, do get some advice before you do your submissions. 8938, as we talked about before, if you've got foreign bank accounts, investments, pensions, that's outside the United States, then you would have to file 8938 as well. And then potentially you may have 3520, which could be covering pension schemes, occupation pension schemes. And they may have to file 3520. So you can see how complex the US tax system can be if you've got foreign investments. And it gets worse because you may have to also file 3520. You think, is that a typo? Is it the same thing? Not quite. Actually, the foreign trust of 3520 is you, but the 3520A is the foreign trust beneficiary. Sorry, not trust beneficiary. Is the administrator of that scheme. Now, if they don't do 3520A and report that to the IRS, then it's your responsibility to do that. And again, there are fines for not doing so. So you have to be really careful with this kind of thing. It's quite tricky, to say the least. If you're an American, again, in the UK, or you're a British person in the US, then you will have to inform the IRS that you have a limited company. And you would do that by using Form 5471. In connection with that, you have a UK limited company, which may be generating a profit. It may actually be generating a loss, but you still have to do a tax return equivalent of Form 8992, which basically looks at your UK limited company, looks at the profitability, does a basic computation, and then says, well, should you pay tax on it? And that is even if you've not taken dividends out of that company. Okay, so I'm going to just stop there in terms of what questions you may have. I'm just going to try and go back to my YouTube just to see if there's anything going on here. So let me just have a look. So I need to get relaxed. Okay, nothing ongoing there. Okay. All right, so let's just continue then. Pardon me. So in the, again, I am a UK US qualified accountant and tax advisor. So I have got UK tax returns, then Optimized Accountants can help you. If your US tax returns need to be filed, again, Optimized Accountants can be filed for you. And that's, again, even if you just need one or the other. So you could just need a UK tax return or just use a US tax return. That's fine. But if you've got both tax returns need filing, then we certainly are doing for you because we can help you with your UK and your US tax return as well at the same time. And I think that's pretty much gives me an end to tonight's presentation. I've got a question. Does the 8938 and FBAR apply to UK citizens resident in the US? And that's a great question, Maura. I would say that the 8938 and FBAR applies to UK citizens resident in the US, but it also applies to Americans living in the UK as well. So it doesn't matter about your nationality. If you need to file a 1040 tax return in the United States, then you will have to do this FBAR and 8938 anyway. So don't think about it of where you are or what residence you are. If you're filing and you have foreign bank accounts outside the United States, then you definitely need to file those tax returns. So hopefully you found that useful for those that could attend. So thank you ever so much for that. I'm going to be doing these shows every 6 to 8 weeks. And next time around, actually, we're going to be focusing very much on the tax changes as well into this. We know that the Labour Party are doing a big announcement in October. A couple of my videos are really going well strong at the minute, where I'm predicting what's happening with wealth tax, capital gains tax, stamp duty, land tax into the possible changes. I'm going to be doing the same now for the US as well, because obviously there's going to be huge amounts of change in not just in the United States, but in the United States as well. So I will be doing videos on that. But thank you ever so much for attending tonight. And I very much look forward to catching up with you all.